The Russian economy, one of the largest in the world, remains heavily influenced by its natural resource wealth, particularly in the energy sector, with oil and natural gas serving as the backbone of its export revenues. In recent years, however, the Russian economy has faced significant challenges due to global economic shifts, international sanctions, and geopolitical tensions. The ongoing conflict in Ukraine and subsequent sanctions imposed by Western countries have put immense pressure on the Russian economy, leading to disruptions in trade, reduced access to international financial markets, and currency instability. Despite these challenges, Russia has sought to pivot towards strengthening economic ties with non-Western countries, especially in Asia, and promoting self-reliance in critical industries like agriculture and technology. Historically, the Russian economy has undergone substantial transformations from the state-controlled, centrally planned economy of the Soviet Union to a market-oriented system following the Soviet collapse in 1991. The transition in the 1990s was marked by economic hardship, including hyperinflation and widespread poverty, but the early 2000s saw a period of growth fueled by rising oil prices. However, this growth has proven fragile, as Russia remains heavily dependent on global energy markets and vulnerable to external shocks. The events of the past decade, including the annexation of Crimea in 2014 and the more recent Ukraine crisis, have further complicated Russia's economic trajectory, leading to tighter sanctions and economic isolation from the West. These historical events shape the current economic environment and highlight the need for economic diversification. The purpose of this study is to analyze the contemporary Russian economy in light of its current challenges and opportunities. The study will examine how the country is managing its economic policies under international sanctions, the efforts it has made to shift its trade focus towards new partners, and the overall impact of these changes on its long-term growth prospects. Additionally, this analysis will explore the structural challenges within Russia's economy, such as its reliance on the energy sector, the effectiveness of recent policies aimed at promoting technological innovation and domestic production, and the role of government intervention in maintaining economic stability. By providing a comprehensive overview, this study aims to offer insights into the future trajectory of the Russian economy amidst ongoing global uncertainties. Russia's economy is dominated by its vast natural resources, particularly in the energy sector, which remains the cornerstone of its economic structure. Oil and natural gas exports are critical to government revenues and the country's GDP. Despite the geopolitical tensions and sanctions resulting from the ongoing Ukraine conflict, Russia continues to be a leading supplier of energy, particularly to countries outside the West, such as China and India. The government has also focused on pivoting energy exports to Asia, seeking to mitigate the impact of sanctions from European and North American markets. This shift has helped stabilize energy revenues, though the long-term impact of sanctions on technological investments and infrastructure in the energy sector remains a concern, particularly with restrictions on Western technologies needed for exploration and extraction. Beyond natural resources, Russia's industrial and manufacturing sectors are integral to its economy, though they have faced stagnation in recent years. The industrial sector, traditionally strong in heavy industries like steel, chemicals, and machinery, has been hit hard by international sanctions, which have limited access to foreign technology and capital. Russia's arms industry, a significant component of its industrial output, continues to thrive, with the country being one of the largest global exporters of military equipment. However, sanctions have impeded modernization efforts across other industrial sectors, particularly in advanced manufacturing and high-tech industries. Russia has been forced to ramp up domestic production in several areas, but the absence of key foreign investments and the slow pace of industrial reforms have limited broader growth. The service sector in Russia has seen some expansion, particularly in areas such as telecommunications, finance, and retail, though it remains underdeveloped compared to other major economies. The digital economy has grown significantly, with Russia developing a robust tech industry focused on domestic platforms for social media, e-commerce, and financial services, partly in response to the restriction of Western digital platforms. Despite this, the financial services industry has faced challenges due to sanctions that have cut off many Russian banks from the international financial system. The tourism sector, which was once an emerging source of income, has also suffered due to the geopolitical situation, with a sharp decline in international visitors. These trends demonstrate both the growth potential and limitations of Russia's service sector in the current geopolitical climate. The agricultural sector in Russia has become increasingly important, particularly as the government has pushed for greater self-sufficiency in food production in response to Western sanctions. Russia is now one of the world's largest wheat exporters, and its agricultural exports have surged in recent years. The country has also expanded its production of other crops such as barley, sunflower oil, and sugar beets, largely driven by the need to reduce reliance on imported food products. The Russian government has supported the sector through subsidies and investment in agricultural infrastructure, leading to improved productivity. However, the agricultural sector still faces challenges such as outdated equipment and a lack of modern farming techniques, which limit its full potential. Russia's gross domestic product, GDP, has experienced significant turbulence in recent years, largely due to international sanctions and the economic fallout from the ongoing conflict with Ukraine. Prior to the imposition of sanctions in 2014, Russia's GDP was growing steadily, primarily driven by strong energy exports. However, the annexation of Crimea and subsequent sanctions disrupted this growth. The recent war in Ukraine and the resulting economic isolation have further exacerbated these issues, leading to a sharp contraction in the economy in 2022. While Russia has been able to pivot toward Asian markets, particularly China and India, for some of its exports, the long-term effects of losing key European markets have created considerable uncertainty. Despite these challenges, Russia's GDP has shown resilience, with government stimulus efforts and domestic consumption helping to mitigate deeper economic decline. Inflation in Russia has been a critical issue, particularly in the aftermath of sanctions and the economic disruptions caused by the war. Following the imposition of Western sanctions in 2022, inflation surged as the value of the ruble fell and prices for imported goods skyrocketed. The Russian government has implemented stringent monetary policies to control inflation, including raising interest rates to stabilize the ruble and curb price increases. Inflation has since eased, but it remains a significant concern, especially with the country's limited access to foreign goods and technology. Domestic production has not fully filled the gap left by import restrictions, leading to ongoing inflationary pressures in certain sectors, particularly food and consumer goods. Unemployment rates in Russia have remained relatively stable despite the economic challenges posed by sanctions and the war, though this stability masks deeper issues in the labor market. Official unemployment rates have hovered at low levels, partly due to government intervention and job protection measures in key industries. However, underemployment and reduced wages have become more prevalent, particularly in industries heavily reliant on foreign trade and investment. Many businesses have struggled to adjust to the new economic conditions, leading to job cuts or reduced working hours. The informal labor market has also expanded, with more people turning to temporary or part-time work. This has led to an increase in economic insecurity for many workers, even as official unemployment rates remain low. The Russian ruble has been highly volatile since the beginning of the Ukraine conflict and the imposition of international sanctions. In 2022, the ruble initially plummeted due to capital flight and fears of economic collapse. However, government measures, including capital controls and a significant interest rate hike by the Central Bank of Russia, helped stabilize the currency. Additionally, the demand for rubles from countries still purchasing Russian oil and gas provided support for the currency. Despite this short-term recovery, the ruble remains vulnerable to external pressures, particularly as more countries move to reduce their reliance on Russian energy. The continued volatility of the ruble reflects the broader uncertainty surrounding Russia's economic outlook and its ability to navigate long-term sanctions. Russia's fiscal policies in recent years have been heavily shaped by the need to respond to the economic fallout from sanctions and the financial challenges posed by the ongoing conflict with Ukraine. The Russian government has relied on its vast oil and gas revenues to support its budget, using these resources to fund social programs, military spending, and economic relief measures. However, as Western countries have reduced their energy imports from Russia, the government has been forced to adapt by increasing trade with countries like China and India. Additionally, Russia has been tapping into its sovereign wealth funds, particularly the National Wealth Fund, to fill gaps in the budget. This has allowed the government to maintain spending levels despite reduced revenue streams, but long-term reliance on reserves is unsustainable, and finding new revenue sources remains a significant challenge. In terms of monetary policies, the Central Bank of Russia has played a critical role in stabilizing the economy amid unprecedented challenges. In response to the rapid devaluation of the ruble in early 2022, the central bank implemented strict capital controls and significantly raised interest rates to curb inflation and protect the currency. These measures helped stabilize the ruble in the short term, though they have also dampened domestic demand by making borrowing more expensive. Over time, the central bank has cautiously lowered interest rates as inflation has eased, but monetary policy remains constrained by the ongoing sanctions and limited access to global financial markets. The central bank continues to face the delicate task of balancing currency stability with the need to foster economic growth in a highly uncertain environment. Russia's trade and investment policies have undergone significant shifts as a result of international sanctions. With the loss of many Western markets, Russia has pivoted its trade relationships toward Asia, particularly China, India, and other non-Western countries. This shift is reflected in growing energy exports to these regions and increasing economic cooperation in sectors like technology and infrastructure development. However, sanctions have also severely limited Russia's ability to attract foreign direct investment, FDI, particularly from Western countries. To counter this, the government has introduced policies to encourage domestic investment and promote import substitution, particularly in industries such as agriculture, technology, and manufacturing. While these policies aim to reduce Russia's dependence on foreign goods, they have been slow to fully replace the lost trade and investment opportunities from the West. Russia's regional economic policies are increasingly focused on addressing the growing disparities between Moscow, St. Petersburg, and the rest of the country. The government has launched several regional development initiatives aimed at boosting economic activity in underdeveloped regions, particularly in the Far East and Siberia. These regions are seen as critical for Russia's long-term growth due to their natural resource wealth and strategic importance. Special economic zones and infrastructure projects have been established to attract investment and stimulate economic development in these areas. However, progress has been slow, and many regions continue to struggle with poverty, poor infrastructure, and a lack of economic opportunities. The war in Ukraine has further strained regional budgets, with resources being diverted to military spending and relief efforts. Russia's foreign trade and relations have undergone a significant transformation in recent years, primarily driven by geopolitical tensions and economic sanctions. Historically, Europe was Russia's largest trading partner, especially in terms of energy exports. However, following the annexation of Crimea in 2014 and the escalation of the Ukraine conflict in 2022, Western countries imposed sweeping sanctions on Russia, leading to a major shift in its trade dynamics. In response, Russia has increasingly pivoted towards Asia, with China and India emerging as key trading partners. Trade with these nations has expanded, particularly in the energy sector, as Russia seeks to replace lost European markets. At the same time, Russia is fostering closer economic ties with countries in the Middle East, Africa, and Latin America, aiming to diversify its trade relationships and reduce its dependency on Western economies. Russia's export profile remains dominated by natural resources, with oil, natural gas, and coal accounting for the majority of its foreign trade revenues. Despite sanctions, Russia continues to be a leading energy supplier globally, with China and India becoming significant buyers of Russian oil, often at discounted prices due to Western sanctions. Beyond energy, Russia exports metals, chemicals, and agricultural products such as wheat, which has become an important export commodity in recent years. On the import side, Russia has faced significant challenges due to sanctions that have restricted access to Western technology, machinery, and consumer goods. In response, the country has increased imports from China, including electronics, machinery, and industrial equipment, while also promoting domestic production through import substitution policies aimed at reducing reliance on foreign goods. Trade agreements and sanctions have become central to Russia's foreign trade strategy. In the wake of the Ukraine conflict, Western nations, including the US, EU, and their allies, imposed sanctions targeting key sectors of the Russian economy, from energy to finance, defense, and technology. These sanctions have severely limited Russia's access to Western markets and financial systems. In response, Russia has focused on strengthening trade agreements with non-Western countries, including China's Belt and Road Initiative, and partnerships with the Eurasian Economic Union, EAEU. Russia has also sought to expand its trade agreements with countries in Africa, the Middle East, and Southeast Asia, aiming to build new markets and reduce the impact of Western sanctions. However, these efforts are still in progress and have not fully compensated for the loss of trade with Western nations. Russia's role in global organizations has also shifted as a result of its strained relations with the West. Russia remains a member of key international organizations such as the United Nations, UN, the BRICS Group, Brazil, Russia, India, China, South Africa, and the Shanghai Cooperation Organization, SCO. In these organizations, Russia has sought to strengthen ties with countries that are less aligned with Western powers, positioning itself as a leader in fostering a multipolar world order. At the same time, Russia has been increasingly isolated from Western-led institutions, such as the World Trade Organization, WTO, and the G7. The sanctions and the war have limited Russia's ability to influence global trade policies, especially in the context of Western-dominated institutions, pushing Russia to rely more on alternative forums for diplomatic and economic engagement. The Russian economy faces a series of significant challenges, with economic sanctions playing a pivotal role in shaping its current trajectory. Since 2014, sanctions imposed by Western nations in response to the annexation of Crimea and further escalated following the Ukraine conflict in 2022 have targeted key sectors of Russia's economy, including energy, finance, defense, and technology. These sanctions have restricted access to international financial markets, blocked the import of critical technologies, and led to the withdrawal of foreign companies from Russia. The result has been a contraction in the economy, reduced foreign investment, and difficulty in maintaining competitiveness in global markets. However, sanctions have also forced Russia to explore new markets, deepen economic ties with non-Western countries, and pursue domestic solutions to fill the gaps left by these restrictions. One of the main strategies Russia is pursuing in response to these sanctions is the diversification of its economy. For decades, Russia has relied heavily on oil and natural gas exports, making it vulnerable to fluctuations in global energy prices and geopolitical pressures. The current economic environment has underscored the need for diversification to reduce reliance on energy exports and foster growth in other sectors. Agriculture has been a bright spot, with Russia emerging as one of the world's leading wheat exporters. Additionally, the government is pushing for greater development in manufacturing, technology, and infrastructure. While there has been some progress, true diversification remains challenging due to structural inefficiencies, a lack of investment, and ongoing economic isolation from Western markets. Innovation and technology development present both challenges and opportunities for the Russian economy. Sanctions have severely restricted Russia's access to Western technology, particularly in critical industries such as oil extraction, aerospace, and telecommunications. In response, Russia has turned to domestic innovation and increased cooperation with China to develop alternative technological solutions. The government has implemented initiatives to boost research and development, encourage startups, and increase technological self-sufficiency. However, the absence of Western expertise and technology has slowed progress, and Russia still lags behind global leaders in tech innovation. Despite this, areas such as digital services, cybersecurity, and military technology have seen notable advancements, offering a foundation for further development if properly supported. Looking ahead, Russia's future economic prospects depend heavily on how well it navigates the current sanctions regime, adapts to a more isolated global position, and manages internal economic reforms. The government's focus on developing stronger ties with Asian markets, especially China and India, presents opportunities to reorient trade and investment flows. Additionally, expanding into emerging markets in Africa, the Middle East, and Southeast Asia could provide new economic lifelines. However, these shifts will take time, and the loss of Western technology and investment will continue to weigh on Russia's economic potential. The future will also depend on the country's ability to invest in infrastructure, education, and technological innovation, all of which are necessary for long-term growth and competitiveness.